In today's market update video, we're going to be looking at drawdown analysis. We're going to be looking at what is drawdown analysis, why we should be looking at drawdowns and analyzing them fully, and then finally we're going to be looking at how we can use this important priceless data for trading the markets effectively and consistently. Hi traders, thank you for joining the MTM team today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It is Thiru Napan here, founder of Master the Markets, Illitrace Conference and the Traders Open Day. So let's dive into the topic for today, which is drawdown analysis. So let's go and take a look at what is actually drawdown analysis, okay? So if you're looking at what it is, in specific, it's looking at in a particular strategy over years, okay? Let's say we are analyzing for 10 years, let's say from 2010 to 2020. For all these 10 years, what we're really analyzing is, in between, let's say between the years, what is the drawdown that any particular strategy had? Okay, so and remember that anything that we're teaching you here, especially with certain topics, is that it's cross-transferable to trading strategies, any strategies that you may be trading, or any investment that you might be doing as well. So alright, so let's get back then. So drawdowns you can then look at is, you see, if between these years, let's say 2012, you had a drawdown of minus 52 pips, let's say. In 2013, then you had a drawdown of 750, let's say. Okay, so you analyze these drawdowns. This is what we call by drawdown analysis, okay? And more specifically, when you draw your equity curve out, if it looks something like this, which is a standard equity curve, we are really looking to analyze this peak to valley drawdown. And we're looking to analyze the maximum peak to valley drawdown before new equity highs were reached. Okay, that's what we are looking at. Right, so that's the what. All right, now let's go on to why. Some of you may ask, okay, why is this important? Why do I need to know my drawdowns? Why do I then need to go and analyze it even further? Now, the main reason for that is traders. You see, for example, trade by trade drawdown analysis, right? So let's say you did that and you found out that, you know, that there can be 3 losses in a row and the maximum that you can lose trade by trade is about $500. So what that does is that when you trade in real time, if you do get an equity dip of minus $500, you won't be paralyzed, you won't lose your confidence, you won't be hesitating to pull the trigger for the next trade. So this is why we say that you must know your drawdown analysis, because it helps you pull through your losses and trade with clarity and conviction, okay, so as to achieve consistent performance. So that's why you must know that. Now, the final question is, you may ask, okay, what is good? You've explained that, Thiru, and then why, but how do you actually apply this in real time? How does it look like? Now, before I go to the how, I just remembered, in terms of the what, there's 3 types of drawdown analysis you must do, and we cover this in Traders Bizcamp package and Traders Toolbox as well, which is 1, you must look at year-by-year drawdown. Next, you must look month-by-month drawdown. And finally, trade-by-trade drawdown. And what you're looking to pull out of all of this is your maximum peak to valley drawdown and then your final consecutive losses cluster. So there's quite a lot that you must analyze to trade your strategy with confidence.
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
Now, saying all of that, let's go on to take a look at this one over here in terms of our analysis of the results. You see, how will this all look like in terms of when you are analyzing a drawdown? Let's take a look over here. So you see, for example, GBP USD over here, then you can see I've consolidated over 10 years, right? And then you can each analyze it over each year, how are these currencies performed, how these instruments have performed. You see, for example, 2010, the maximum drawdown we had was from these two currencies, Euro dollar and dollar Swiss, and dollar Swiss did quite a lot of drawdown, minus 456, whereas the others was just about minus 42. So overall for the year, if you started off in 2010, you'd have got a drawdown of 89 pips, and at 10 pounds a pip, that's 890 pounds. For the next 3 years, it was more or less standardized. It was around the 10,000 mark. You can see all the currencies did perform well. Whereas in 2014, you started to have a dip again, okay? And then the biggest one that had dipped was Aussie dollar, 136, and then we lost about 100 pounds. Again, then it then came up back up, and another drawdown was in 2017, okay? And then after that, it looks like for 2018, 2020 being the biggest year, 14,440 at 1,444 pips of profit. It was the biggest one. So our biggest drawdown really is 89 pips if you traded these 5 instruments and continue to trade them. In 2021, however, it's coming down to be the same kind of drawdown. It is in a very small drawdown of minus 77 the last time we looked at it. The year is not ended yet. But yeah, so it's kind of matching up with the other drawdowns that we had. So this is what gives you the clarity to move on with the strategy as I explained. Now, if you look at other instruments, for example, other than the currency world, you can also see that in Brent oil, one of its maximum drawdowns was actually over 2 years, actually consecutively. So minus 1,500 about that, 1,507 to be exact. After that, all the other years were smooth sailing. So you must know all of this. Silver, interestingly enough, hasn't had any drawdowns over here. Coffee has had a drawdown in 2013, and then Bitcoin only really started to move 2017. That's when we started to consolidate data. No drawdowns there. Dow Jones 323 in 2013, and then S&P no drawdowns really. So actually, when you actually consolidate all of them, the curve actually becomes a bit more smoother, as I explained in my other videos. So this is the kind of drawdown analysis you must do. This is for the Cash-in 4.0 indicator that we have backtested over all these years, and we're forward testing it now in our live trading room as well. This is CI 4.0, 70% OE is what we are looking at, one-day exit. All right. And the last thing I want to tell you is this is just year-by-year analysis. After that, you need to do month-by-month analysis, as I said, then trade-by-trade analysis as well. Okay, so that's the full-on explanation of drawdown analysis, and finally, then you can make up a chart like this, and all instruments. There you go, you got something like that. But as I said, the drawdowns must be analyzed much more further. Okay. So that's that on the topic. So let's go on to our market update for this week.
For those of you who are unsure of any of the terminology or the concepts in this video, the first step to do is to find out your trader type by taking our Trader Personality Quiz today. This will help you trade strategies that fit your personality to achieve consistent performance. After the quiz, you will also gain a free video course that suits your personality to help you trade safely with low risk and high returns.
So far, just a quick recap before we look at all the other markets. So far, we looked at drawdown analysis for today. We looked at what is drawdowns, and then we looked at why it is important, and then finally how to apply it in terms of analyzing your strategy data, which we use using the CI 4.0 70% open equity one-day exit strategy. And I explained to you year by year, and you also need to analyze your monthly and trade by trade and your consecutive losses cluster. Alright, so definitely go and take a look at that, do some homework on it as well, and see how you can also get your drawdown data on your strategy, or even if you want to come and talk to us about your strategy as well, do a one-to-one with us, our trader coaches will be more than happy to help you. You can just click on the link below. Alright, so that's all for me on this topic over here. So let's now move on to our market update. Let's take a look at the markets and how they're performing. Dollar Swiss over here, we have open equity diminishing over here is what we have over here. We had a primary as of yesterday, and then we can see now a big sell-off over there. So I would say more open equity, with the turning point happening over there to the downside. Okay, now moving on, then we have dollar yen over here as well. A bit of a sell-off. Open equity has diminished to the downside, more open equity to the downside, I would say. GBP USD on the other hand, open equity is diminishing to the downside, so trading stop losses much more lower, much more tighter to the downside will be more reasonable, more advisable. Euro dollar on the other hand, as you can see, yesterday it was an insider bar. Open equity has diminished to the downside, so I would say more open equity to the upside. Aussie dollar, definitely open equity diminishing to the downside, so I would, if you're taking this on a downside, I would say more aggressive trail to the downside. GBP yen on the other hand, traders, you can see that there is more open equity to the downside. You just cross this, but aggressive trail will be advisable. Bitcoin on the other hand, again, just a confirmation bar here just recently, so I would just say more open equity to the downside on Bitcoin before it turns around. Remember, I mentioned in my previous videos as well, look at the higher time frames as well. Over here, it's still an uptrend. It's just a bit of a turning point on the smaller time frame. So you can trade that accordingly as well if you want to do momentum trading, as I talked about in our previous market update video. Brent oil on the other hand, traders, you can see more open equity to the downside, just a confirmation bar yesterday. Gold on the other hand, you can see there's a bit of a turning point that is happening over here. It's more open equity to the downside, but this is the first interruption. If you do want to ride it, I would say more aggressive stop to the last bar over there. FTSE, take a little bit more to the downside now, so we got more open equity to the downside over here. Dow Jones, I would say more aggressive trail on each bar because the open equity is diminishing to the downside. S&P just went to the downside today, so I would say more open equity to the downside. Top to bottom is just confirmed. Silver, on the other hand, you can see also over here that open equity is diminishing to the downside, more aggressive trails to the downside. And wheat is also diminishing its open equity to the upside, so aggressive trails if you're on the long basis. Right, so that's all for us from the market update on all the various instruments. So now let's take a look at our performance so far for this week. So there you go, that's our performance for the week that has gone up to 26th November for this week. Elite Room has been flat. Live Trading Room on the other hand, we've had 1% profit on 70% OE. The one-day exit, which I also showed you the drawdowns on as well. Total cross, both trading rooms, we've got 1%. Okay, so that's all from us on this video on the market update. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.